Hello, my name is Andy Staples and I'm the Director of the Economist Corporate Network here in Japan. We've just had our Regional Strategic Forecast, which is a biannual event where we invite in the Chief Forecaster for the EIU to give a keynote address on the global economy. And we also complement that with a panel looking at Japan's domestic situation. So I'm delighted to introduce you to Leo Abruzzese. Thank you very much for joining us.
Thank you, Andy.
And we very much enjoyed your discussion this morning, your overview of the global economy. And I wondered if you could just talk us through some of the key points of that.
Of course. When we look at the global economy, we are analyzing it really in terms of what we're calling the 3 R's. And the 3 R's are the risks that are associated with the global economy over the next few months, the recovery that we see underway, especially among a few of the larger economies, and then a rebalancing in emerging markets. So to break that down, most of the risks are associated with what the U.S. Federal Reserve is doing. So we're gradually seeing the Fed begin to pull back a bit on all of that free money that they've put out there, and you've seen what this has done to emerging markets over the last 6 months. Our particular view is that it definitely does pose some risks, and you're seeing countries like India and Brazil, those that have big deficits that are suffering, but we don't expect this pullback by the Fed to lead to a catastrophic situation in emerging markets. So there are risks there, but we don't think they're catastrophic risks. The recovery really looks more at the established markets, the United States, Japan, and Europe. Happily, we're seeing all 3 of those major economic blocks doing a bit better than we'd expected. Japan in particular, we've seen growth at over 2% in Japan. Abenomics, which everyone is hoping will begin to give some traction to Japan, indeed does seem to be doing that. So we're looking at a better performance in Japan, even in Europe, which has been struggling at better performance there, and certainly in the United States. The 3rd R is more or less of a rebalancing. There's been a great deal of discussion lately about the retreat of emerging markets, the death of emerging market economies. We think that is well overdone, but there is a rebalancing. China is rebalancing to a slower growth rate, and we're going to have to see countries like Brazil and India focus a bit more on the economic fundamentals and less on the anything goes environment, which has led to high inflation. So risks associated with the Fed, recovery, some upside for Japan and the US and Europe, and then a rebalancing where emerging markets settle to a more sustainable level.
Okay, thank you. Just going back to thinking about risk, and we hear about possible tapering in the US, and that was a key part of your address there, looking at risk there. We see the opposite in Japan. Since March of this year, with the appointment of Mr. Kuroda at the Bank of Japan, we've had a huge program of monetary stimulus. That's led to quite a rapid devaluation of the yen, perhaps about 20% against the dollar since late last year. How do you see that playing out? If the American economy is moving back into recovery, it's growing, we would expect to see money flowing back to the States, as I think you already indicated. How do you think that's going to play out with sort of yen-dollar exchange rates?
Well, certainly there's been a big move in the yen, as you said, between November of last year and at least up to the middle of this year. The yen depreciated, as you know, from about 75 to the dollar, at one point up to about 107 or 108. It seems to have stabilized at roughly around 100, which we've always thought is a good value for the yen. It's probably close to what an economist would call an equilibrium rate, or a rate that you would expect that more or less balances the global fundamentals on that. So clearly this has had positive impacts for Japan's exporters. We have, if you look at EIU's forecast, a nice pickup in Japanese exports over the next year and a half. That's partly because the yen has depreciated, which of course makes Japan's exports more competitive globally, but also because we do see Japan being able to export a bit more to the US and a bit more to Europe. So a bit of a positive double act there for Japan, a more competitive exchange rate and a bit more demand. So Japan benefits on the price side and on the demand side as well. I think there's no question that Abenomics so far has worked pretty well. I think we've seen growth in Japan over 2% for the first half of the year. That's more than you would normally expect in Japan, but there's a good deal of stimulus going on, so you would expect Japan to have a little bit of an outsized performance. Yeah. As Japan raises taxes next year, I think a little bit of the bloom will come off the rose, but by and large, we are expecting Japan to do better next year than this year. And although Japan's growth rate over the medium term is probably not more than maybe 1.5%, our outlook for Japan certainly better than it's been before, even with the tax rise coming in next year.
Okay. So Japan was firmly within the recovery group of those economies that you were looking at.
Yes.
However, touching on the risk, fiscal risk, we are at the position where there's a planned rise in the sales tax. It should go from 5 to 8% next April.
Yes.
There's a lot of speculation that this would very negatively impact on the economy. How do you see that playing out, particularly with your forecast for GDP growth?
It's certainly a risk. Japan, as many people know, tried this process about 15 years ago in the late 1990s, and the general view at the time was the tax increase actually pushed the economy back into recession again. The simple question, which is by no means simple, is will the economy be strong enough to be able to endure this tax rise? So it's all about timing. If the tax rise was going into effect now, for example, I think there's a realistic possibility it could eliminate, destroy a lot of the goodwill and a lot of the positive benefits we've seen from Abenomics. But it's still about 6 months away. What I can say is, looking at other large economies like the US has had to absorb a much stronger series of fiscal tightenings, tax increases and spending cuts, actually much worse than what Japan is planning next year. And although it has hurt the US did it at a time when the economy was strong enough to be able to absorb it. I think that having a very strong monetary stimulus, which the Bank of Japan is putting in at this particular moment, having increased consumer and business confidence in Japan that we're seeing right now, I would say that although it's a close call, I think Japan has enough momentum from business confidence, consumer confidence, monetary stimulus coming in from the Bank of Japan, that even though it will slow Japan down, there's no question that it will have an impact. I think Japan should just be able to absorb it, keep positive growth, and continue to grow at a strong enough level. Normally, I would say Japan should put this off, but with debt at 220% of GDP and the markets expecting this, I think it could actually do more damage to Japan from a market confidence standpoint to put it off than to actually go ahead with it.
Yeah, okay. So if I could just summarize your global forecast, it's cautiously optimistic. We are seeing rebalancing, we are seeing recovery in some of those key economies, and I think if you'd agree, we're in a much stronger position than we have been for maybe the last 2 or 3 years.
I think so. I will say, to be candid about this, we had expected this year to be more of a turnaround year. And certainly it has been for Japan, it has been for the US, it's even beginning to be for Europe. What has been surprising somewhat this year has been the poor performance of emerging markets. We had not expected China, for example, to in effect agree to the slowdown to try to rebalance the economy, and we had not expected that to happen quite as quickly. So this year has been as expected for the wealthier economies, not quite as expected for the emerging markets. So we do think that 2014 should be a year in which the emerging markets understand some of the mistakes they've made and begin to put their programs, the reforms back on track. And if that happens at a time, even with the fiscal drag in Japan, if that happens at a time when Abenomics continues to gain traction, when Europe begins to lift itself out of the dregs, and when the US begins to sustain itself, we do think 2014 looks like it's going to be a better year and a more sustainable year than 2013 has been.
Okay. Well, thank you very much for your input this morning.
Thanks,
you have another 5 cities within the region to visit over the next couple of weeks, so good luck with your travels.
Thank you very much.
And thank you very much for joining us.